know, Millie, but she won't never prop that phone up so I can see you, and she don't never have it charged because she can literally buy 10 tablets, bro.
She already has two.
No, 10. I said 10 for everybody.
You 10. She already got two.
I said 10. 10 for everybody. 10, 10, 10. 10
No.
tablets. 10 tablets. Get it for Black Friday. Black Friday. Find cheap tablets.
No, two's
Like, come
enough.
on. For the kids. Tablets.
No, two's enough.
Yeah, I know, but everybody needs fucking devices, actually. They
Everybody
need
got devices.
phones, they need apps, they need everything, bro. It don't be enough space for all that stuff, bro.
We're not going to talk about this. I'll hang up.
I know, because that's what you was doing in the first place. You keep propping the phone up to the side.
If you over 10 tablets, 2 tablets, we don't have to argue about it because it don't matter. She got two and that's
Yeah,
all that
it
matters.
don't matter to you.
It don't matter to anybody. You can take it to anybody and they wouldn't care. You can tell the judge that she needs 10 tablets. I'll tell the judge she got two and they'll say two's enough. She only got two
Hey,
tablets.
stop yelling around the kids and all that. I just now turned my live on.
Ain't nobody yelling. I have to talk loud. She's famous.
Bro, you literally arguing with me over nothing.
No, you're arguing with yourself on this side.
Alright. What's going on? What the fuck?
Millie, are you okay?
Yeah, but put the camera on her at least. Like, what is going on?
Are you okay?
Oh my stars, bro. That's the gaslight right there. That's a whole gaslight. Like, I can literally never see my kids and they're crying. I can't see them while they're crying. Like, and then she's all right. Like, what are you doing? Then she hangs up. Like, this nigga's crazy, bro. I wasn't. You hung up. I wasn't, and you not parenting at all, because you won't let me see the kids, because all you had to do was just let me see what was going on when I asked, instead of just hanging up and hiding the whole shit. That shit was dumb. Just fuck you, bro. Just got my face. Try that. Okay. I don't know why I couldn't come.
music. It's gotta be renewal, right? Play it.
I was there. Get on my nerves, bro. Just, I don't even know. Like, what was the whole point of hanging up? Just to text me. Like, who does that? Like, OMG. Alright, that's meta. Sorry about that, y'all. Just getting adjusted. They're rushing me on live. Everybody want me to come back on live. I wasn't ready. Check everything. Oh. Oh my god. Mark is bullish as ever.
Talking to yourself. Ever catch yourself talking out loud when no one's around? Okay, in case you're riddle, if it's not listed on Booking.com, it's invisible to millions of travelers on our platform. Don't let your vacation rental be invisible. Get seen, get booked. On Booking.com, Booking.yeah. Blink and get more with new 2K Plus Smart Security. With Blink 2K Plus, get set up in minutes to see every detail in crisp 2K video. Get voice cancellations for clearer two-way talk.
Hey, perfect timing.
Get wireless power for up to 2 years of battery life. Plus, with smart detection, you always know who's there. Plug in or battery power. Get Blink 2K Plus and get more with smart security for less. And that's no help.
Welcome to Art Venture Fund. Tuesday, to get very good venture exposure, you basically have to be rich.
The Art Venture Fund is used to democratize venture capital.
We are offering investors something they have not been able to access before. I think this is the most efficient venture portfolio in the world, and we think that should be available to everyone.
Get started investing with as little as $500 today.
Private student loan debt wrecking your life? really need to talk to the lady about. Why refi? Refinances distressed or defaulted private student loans that others won't touch. They'll provide you with successive loan payments based on your ability to pay. NHB.
Net hard and money. WU bonus. NBP bonus. NHB. NHB holds the upside. NHB. WU bonus.
ADHL.
This is bullish right now. What's going on? I'm not sure where this is going.
NHB.
INHB. ADHL. NBPS. NBPL.
Right there.
ADHL.
Okay.
ADHL holds the upside.
I see that breakthrough.
NHB.
I gotta use the restroom. Give me a second.
ADHL. INHB.
ADHL.
NBPL. NBPL. Net hard and money. NKK. SSD. SSD holds it to the upside.
SSB.
MHD may resume in less than a minute. Turn off MA. Test SP. Transfer LT.
CJK. CJED.
MHD may rest 10 seconds. ADHL may resume in less than a minute. CJK. CJED.
INHD.
ADHL may rest 10 seconds.
CJED.
Hey, good morning, good morning, good morning. I'm here with you. I'm here with you.
INHD.
Checking audio as usual.
ADHL.
Hey. Let me know if you hear me okay. I'm sorry to be late, everybody. We're having a short week, but everything looks good in the market. I'm looking for this to break off top. I already see bullish divergence.
ADHL.
Oh my God.
ARWR. MHD halted to the upside.
Look at all Data Vault, boy. I see you, Data Vault. Let's go, Data Vault. I see you, boy. I see you. There you go, Data Vault. Keep doing your thing, boy.
SSP may resume in less than a minute. Priority.
That's me. I'm trying to set up chat. PL's bullish.
RBAC halted.
My quantum area. Yeah, nice buy. Okay. Nice little buy area.
JXG.
This is the weekly time frame. I'm putting on the weekly for you guys.
CLSK.
Yup.
SSP.
Been looking at QS for a while. Just be careful right here. If they happen to break through, I will load the boat. But I was buying this. I'm actually all in on spaghetti right now. So oh yeah. With investing though, it's gonna be okay. And be Pacific. What's down 6%? Cause I move kind of fast and my attention spans everywhere. All right, market pulling back. See this whole. Oh, they coming right through now. We gotta see how much they're gonna pull this back, cause this has been bullish. This is the overall market. All right, this is Weeble. I like Weeble. Hey, listen, I like Weeble. I'm gonna tell you why I like Weeble. Cause it's a wonderful brokerage. Check it out if you don't already know. Data Vault. Oh my God, Data Vault's been up and down. Look what they did to Data Vault. We're really catching a falling wedge pattern right here on this. It's big getting liquidated, but they try and bring this back up. They clear their financials. Just look into it. Do your research on them. They're trying. They're trying. That's all I can say. They're trying. You know. They're doing their best. You know. I like Data Vote. You know. Oh, look at that. Man, bounce right there, right? Lift. Poor lift. We're gonna see what's going on with you lift. I don't know why they're doing you like that. We need lift. Travelers. Awesome. Look at this beautiful chart. Oh yeah. Alright, y'all. I have to finish setting up. Y'all give me a second. Let's go, Apple. Let's go. Apple's looking bullish. Right up in there. See that? Up. Let me see. See what they trying to do here. Rejection right here. A little small one. Just a little small one right here. This is still overall bullish long term. Alright, give me 1 second.
INHD may res in 10 seconds. QUBX.
ADHL.
ONDS.
SGBX.
RTHD may res in 10 seconds.
ADHL.
QBTX. QUBX.
OPENL.
SSP may resume in less than a minute. QUBX. SSP may res in 10 seconds.
DJK.
Almost got it.
AWS. LADS. L80S.
CJK.
NEBX. RIOX. INHD may resume in less than a
ADHL.
minute. L80S. IRE. IRN. CINHD may rest in 10 seconds. OK, LL. SMU.
OPENL.
OK, LL. OK, LL. CLSK. SMU. ANVS. IRE.
INHD.
OK, LL. OK, LL. IREX. ADHL halted down. EJK. IRE.
Still trying to sign in and everything, yo.
INHD.
ANVS.
I hope y'all got y'all charts open, of course.
CLSK. INHD halted to be upset.
INHD.
ANVS. IRE. ONES. CISR. CLSK.
INHD. OPENZ.
look at PL.
RGTX.
Phase into focus on thinkorswim desktop with robust charting and analysis tools, including over 400 technical steps. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
On Pubg.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's market.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make-or-break level for this stock. That could certainly be a short to near-term catalyst.
Next Gen Investing.
What do you really see as the biggest driver of some of the recent pullback? I mean, technical factors, macro headwinds, or just sentiment overall?
Part of us has to admit that we don't really know what it is, right? Bitcoin's been on this 7-year drawdown, which has lost about a third of its value since early October. There's plenty of explanations: ETF outflows, digital asset treasury companies trading down at or below NAV, lingering damage from the liquidity event on October 10th, just retail focusing elsewhere. A lot of macro explanations, a lot of technical explanations, but we just kind of don't know. I think the only thing that we feel kind of for sure is that last leg down, once we got below 100,000 on Bitcoin and below 90, that caught some market participants off guard. So we'll see with this renewed expectation for interest rate moves if that helps get the engine started again.
Okay, now Mike, I want your thoughts here on witnessing perhaps the end of the crypto cycle. I think that's way too early to be saying that, but do you see any degree of a value in this correction, perhaps creating actually long-term opportunity for the bull?
Well, one thing I think is very helpful when looking at Bitcoin is just to take a little bit of historical context. And while, certainly a 30% plus drawdown, in a matter of 6 weeks or so seems like a lot. This is kind of normal volatility for the space. Just looking back over the last 5 years, Bitcoin has had well in excess of a 30% correction in multiple years, and this volatility is 4x if not more than overall stock. So given the very strong run that we've had in just sort of stocks overall and increased correlations that Bitcoin has been trading with that, I think that this is just a reminder. This is a very volatile asset class, and it is quite normal levels of volatility. While it has been deep and sharp, it's by no means not something we haven't seen before.
Okay, so Andy, excuse me, we're looking at this Fear and Greed Index, which is, I think some degree of concern right now. Does this historically signal some capitulation or a setup for a rebound?
That's a key question. We would love to think that maximum pain and maximum anxiety
one second, y'all.
Bitcoin. So there's plenty of optimism with regulatory support, with legislative support. Really, it really is a market phenomenon. I guess, you know, the classic view is that, yeah, maximum pain will signal the bottom. It really feels like the market is hanging on to interest rate expectations right now. So we never want to quite call a bottom. We want investors, to Mike's point, to understand that this is a volatile asset class. Many people are experiencing digital assets in their portfolio for the first year that they ever have, and they're getting a taste of what some of us are more used to. But the long term, the slow money remains very supportive, and overall, the macro environment, the growth environment remains supportive as well. So we like the idea of weathering the storm and, you know, remaining educated on the asset class's growth potential.
Okay, and so, Mike, let's before we let you both go, what catalysts are you watching as you approach year-end that could hopefully reignite some of the optimism? And I will say that today's price activity definitely fueling some of this optimism, at least to start off this trade.
Well, one of the things I would say, you know, just as it relates to Bitcoin prices, especially given, you know, the run we've seen in gold stocks over the last couple of years, and the increased correlations with Bitcoin and, you know, the kind of the top of the market, it's an excellent read for market sentiment. And so I do think it's going to be very important for kind of our year-end Santa Claus rally that we hope to have after a very strong earnings season that we have seen from a lot of the you know, the large mega cap leaders, having some stability here in Bitcoin, and, you know, basically finding this bottom and being able to hold that's going to be really important on whether or not we are, you know, just in more risky equities overall going to see a strong finish to the end of the year, because the margin of buyer for Bitcoin has become similar to a lot of the speculative growth areas in the market. So it's pretty important that we do find the stability. I guess that is going to be, of course, the big question for December on whether or not we do.
Yeah, and I think that a lot of us are hanging their hat on some more stability and maybe neutrality even in the space, which would be welcome in non-volatility. But I appreciate you two both. Amy Bear had a Pubg and research Coinbase Desk indices, as well as Mike Dixon, had a research for Horizon. Thank you so much for joining us on Trading News this Tuesday. I'm Jenna Storm. Download the Superstar Network app, of course, and stay tuned on the Schwab Network. Fast Markets coming up next.
Alright, I'm sorry, y'all.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that is right for you. The platforms and tools webcasts are designed to broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with your education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome to Schwab Network.
Oh, best friend pack. Let's see what's happening.
Strategy. From the opening balance, how do you think
How far can I go? Somebody tell me.
inside the minds of pro traders?
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on UPS.
Some of the biggest headlines, live analysis, breaking news, and sharp trade ideas in 1 minute. The show looks for action. We break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way you're going into earnings. So that would be a further downside area to watch.
Not inside. Actual data, metrics, playlists, and trusted financial forward. Streaming live only. Schwab Network, streaming 24/7. Home screen, home theater, free. SchwabNetwork.com. 2025 has investors on their toes. Now, get ready for the road ahead. Here are Schwab's panel of experts on December 11th, 2026 market outlook. Your guide to forces shaping stocks, global markets, inflation, rates, and more. Here's real time. Stream Schwab Network at schwabnetwork.com.
Oh! Market found a bounce right here, boy. Look at that.
Welcome to Fast Market here on Schwab's Network. I'm Diane King Hall. 4:02 Eastern Time here at the New York Stock Exchange, and the bulls are making up great for it in a holiday short trading week. Let me give you a check of your scorecard as we hit the lunch hour. You've got the S&P 500 rallying now by about 1.25%. Leading the games, you've got communication services followed by information technology and consumer discretionary. But many sectors of the S&P 500 are on the plus side. The majority on the plus side. You do have some weakness in consumer staples followed by energy. The Dow right now has gained a 4.5%. NASDAQ 100 is the bell of the ball, the star of the show, however you want to characterize it. It is higher today. Right now, better by 2.25%. Forecast about 2,000 rallying 1.5% right now. Here's the roadmap for today's show. Let's get into it. We'll look at example option strategy for Alibaba. Across the team from Lightfolio, we'll be along with MJ on Dick's Sporting Goods. And Zoom Communications is also on our radar ahead of its quarterly report card. Now that we've got the roadmap for today's trading action, it's time to bring in my co-host. We've got Tom White in our Chicago studio and Kevin Green joining us from Colorado. All right, guys, so we are kicking off a holiday short week, and it feels like the bulls have the floor again. So when you think about the setup for this week, Casey, you said it earlier, the news flow is critical this week. We're hearing that there's also been this call between President Trump and Xi Jinping. Casey, before I get your follow-up thoughts on that, I want to get your big picture take when you think about this week.
Yeah, holiday shortened week. Volatility coming in a little bit, not surprising. We're seeing gains in some of the different asset classes, whether it's Bitcoin rebounding over 3% today. Equities getting blown here by, as you mentioned, technology staging that rebound. I mean, Nvidia shares are up $6 from its session lows. That stock was negative at one point. So we're starting to see maybe, going into the holiday shortened week that, investors are going to try to maybe put some more risk on at this point. Typically November is a strong month for equities, but we didn't get that strength, in the early stage of this month. We got it in September and October, which we typically don't see. So I think, this is probably a positive for the equity markets as risk on sentiment. I don't know if we're all clear and out of the woods at this point, but at the same time, there probably won't be a lot in the way to get in the way of bulls this week. But we do have a lot of data that's coming out. A lot of it's delayed, DPI data. We got consumer confidence numbers. We got durable goods, GDP. So there's a lot to take away here in this holiday short week. And then throw on top of that, we got a lot of earnings, specialty retailers. We got tech that's going to come out. So yeah, we'll have to wait and see on this. I think if you take a look at the news out of the talks between Trump and Xi, the phone call that they had, progress getting made maybe on the Russia-Ukraine front. That might be a positive for equity markets. But just seems like this is more like a relief rally than anything else. I'm not sure if it's going to stick, but maybe it does.
See, what's your big picture take, especially when you mentioned that the news flow could be critical this week?
Yes, looking at low volatility or high volatility or elevated volatility in an environment where we probably will have low liquidity, that does create an environment where we could see outside movements both to the upside and downside. And so we could see obviously a little bit of retracement. We talked about it this morning, but I think it's definitely very possible. Some of the technicals on this one. So the first one that you're going to look at for the S&P 500 for the upside, the 50 day moving average. We're about maybe 20 points, 25 points away from that 50 day moving average right now. And then the next one would be the upside would be the 20 day moving average. I think as well. I think that the future now we're going to see NVIDIA actually really showing the upside into that could also lead to greater sales for Blackwell and things of that nature. So overall, big day. You just got to hope these games aren't so crazy great for the move over the last week or so. Hopefully, I have another one today.
Okay, and you mentioned one member of the MAG 7. Let's talk about another member of the MAG 7. Shares of Alphabet Google rallying to new all-time highs today, trading at nearly plus 313 right now. Feels like the wind is at the back of the company. Got another analyst who was initiating coverage at BNP Paribas. They've got a bullish take on this. Tom, what's your take?
Yeah, the news about the NATO, build-out that they're, that partnership that they're going to have, the contract that they have, that's going to be motives, right? That's the motive part of the news flow today. But on the back of it, I think it came out last week with the release of the new Gemini 3, their Chat AI bot, which is competing against OpenAI's ChatGPT. It's competing against others in the space. And the reviews that are coming through have been pretty spectacular. Mark Benioff, the CEO from Salesforce, came out and said, hey, I started messing around with Gemini. He goes, I'll never go back to ChatGPT 5 with OpenAI at this point because it's so much better. And we talked about this at the early stages of Google Alphabet when they were lagging the market at the beginning of 2024, 2023. They were the lowest valued Mag 7 name. But now, they're not losing any search business. Advertising revenue continues to pick up. And now they're starting to implement Gemini into every aspect within their business, which is actually monetization. I think that's one of the key takeaways. Everybody's talking about the AI bubble, that, hey, maybe NVIDIA is going to do well, some of the chip makers in that space. But which other companies will be able to monetize it quickly? Obviously, Gemini and Google Alphabet have taken advantage of maybe a lot of the data that they had. The search business is they've got 90% market share there. Nobody's making any inroads on that side of it. So yeah, this is multi-pronged, maybe a rally to all-time highs, and not just a daily news type of event.
Yeah, I've seen some positive comments about that new iteration. I don't have the new version yet. Maybe I'll be in the next part of the rollout. Casey, what's your take? What do you think about Alphabet Google?
Yeah, I would agree. I think Gemini is definitely gaining the attraction of a lot of web developers that are out there. That's been an interesting UI for a lot of different teams. Yeah, and then also the ability to integrate with certain CRMs and things of that nature. So that's also a benefit. The video deal, I think that's also a benefit. A very small deal on a relative basis, but once again, kind of showing its integration, not only here in the United States, but around the world. There's some new security factors. Remember, this is a company that does pull some CPUs, not really NVIDIA GPUs, and they are seeing that the inferencing aspect of their business, utilizing CPU, is actually a benefit for them. So they have a little bit of a leg up. This also is on the back of
pull back.
You know, when you take some failures, this is the second failure. This isn't the first one. Their oral medication didn't, show efficacy as much as maybe the street wine that initially hit the stock. But yeah, this is a failed relative 4-year low here today and pulled back.
He had to hold up,
So not surprising,
sitting sideways.
with another
Oh.
And you've got, let's see, at least one analyst re-ranked the stock, HSBC downgrading it to a hold. Casey, what's your take when you look across this one?
All right, if everything pulls back, y'all, discount everywhere. That's all that is.
Working across
Just
the
gotta see what's going on
What Asana helps
with
you
everything. Let me see now.
That's because Asana is where humans and AI coordinate and work together. AI can spot roadblocks and assign work in a snap, so everything and everyone stays on track.
Wow.
That's how work gets handled.
Let's
That's
go.
Asana. Visit us at asana.com. That's ASANA.com.
We need this to break. Obviously off top. On that.
Yeah, I mean, make a great point. They were first, but they have not been able
Woo.
to, keep up that momentum.
Let's go. Let's go, Google.
Take a look at Biden. Those shares are rallying after picking up an upgrade from maybe one say they moved off the sidelines from neutral to all the way up into the top of the case.
The cloud-based businesses over there and AI
All right.
businesses over
Let me get some drink.
been lacking their peers here domestically, and that's been a concern. Apple News' David Tepper, this is his biggest holding. He came out with that a couple quarters ago, and he says if you look at the growth, and the JP Morgan analyst said the same thing. Narrative is shifting. Cloud and artificial intelligence are going to become the primary growth drivers for these companies. And I think making some inroads against Alibaba, one of his competitors over there. This is considered the Google of China, right? So that lends some support right there. We just talked about Google Alphabet earlier in the segment. But, I think it's all about growth and who's leading in that space. Alibaba, their numbers have been slower than maybe some of the cloud providers here in the U.S. as far as growth. They're still losing because they're still investing a lot of money. But this is probably a decent call, and it's a stock that's not in all-time highs and has lagged a little bit within a lot of the Chinese stocks. But yeah, there's definitely a positive note. And then it's supportive of not only David Tepper's Appaloosa buying, having a big stake in here, other hedge funds were buyers in the first couple of quarters because they feel like China stocks are going to outperform U.S. stocks moving forward into 2026.
Okay, that's a good point about underperform some others, but still huge outperformer compared to the S&P 500. What is it, more than 40% this year or around 40% this year? Casey, what's your take when you look across Baidu and this latest take from Making What It Takes?
Yeah, let's see how the market actually does react when we do get numbers from this company. I understand the notion, I guess, to the AI player, and that's rightfully so, that their company is also really focused on ad revenues and consumer. So relatively weak in China, and you can kind of see that with the price action for the stock. So I'm not sure if the market's going to evaluate it what they're doing. Obviously, it seems like this analyst is doing so, and we'll see how this actually kind of plays out. You got to think about these China stocks that are relatively, there's not a lot of them that have reputable names to them. So if you do see this rotation
Getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today. Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab. Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, you get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly. It's Schwab.
What's up, Crawl Nation? It's your number one broker with the best full service wealth management skills in the biz.
Actually, I see something from Schwab.
Yeah, Schwab looks to invest in greater now.
And if you want, they can even make it for you.
Not to mention, Schwab is a sales specialist with taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties. Carl.
Schwab, a modern approach to wealth management. Welcome back, Fast Market here on Schwab Network. Shares of Alibaba moving higher after revealing that its latest twin AI app pulled in more than 10 million downloads within a week of its public beta launch. The company says it plans to increase its AI features for online shoppers in the coming months. Keep in mind, Alibaba is set to report its quarterly results ahead of the open tomorrow. They're expecting to close earnings 66 cents per share. All right, let's put on the trading glasses now. Welcome back in our co-hosts, Tom White and Kevin Green. Today is bull versus bear side. Before we get to the example trades, we got to get your thoughts on Alibaba heading into earnings. Casey, let's start with you. What's your take?
Let's go. Okay.
It's going to be a little bit of a mixed story if we're going to look at the past here. Obviously, this company is expanding its AI offering. We heard about the news items when it comes to the new app and the adoption rate there. And a major player within the AI space in China. We have to be mindful of that. But we did actually see them kind of announce an increase in CapEx spend last quarter. It did provide a little bit of a spike to the stock to the upside here. You're looking for a reaction this time around. I think that's going to be also there too. We talked about the weakness in the consumer just in general from China. I think that will probably have an impact when it comes to top line growth. And we'll see how the market really tries to value this name. Is it going to be more excited by AI, or are they going to still focus on the consumer as their bread and butter when it comes to driving revenue? So far, as you kind of talked about, revenue estimate for this company is $34.42 billion. That's what the street's looking for. The only other thing that I get a little bit concerned about, if you look at this news report that we had last week, that there was a memo within the White House regarding Alibaba potentially supporting the Chinese military and espionage against the United States. You know, it's a background story that didn't hit the headlines that lasted for about a day or 2 days. But keep that one in the back of your mind. We actually saw this around Trump 1.0 in the first administration. We actually signed an executive order that pretty much banned doing business with companies that did actually have exposure to the Chinese military. And he actually did delist a couple of stocks on the exchanges because of that. And so I think there's still some geopolitical risk with this thing, but if you're just looking at the earnings, I think it's going to be balanced out. I think the market's going to be a little bit of a mixed reaction when it comes to fundamental results. Weakness in the consumer is going to drag it down. AI optimism is probably going to carry it high.
Interesting. Yeah, that's what I was expecting around AI optimism. Tom, what's your take?
Well, I think you take a look at the expectations. As far as revenue, they're only expecting about 2% growth. EPS going to be lower than what we saw a year ago. Yeah, it's had a good year. It's up 87%, but it's at the same level where it was 6 years ago. This stock has pulled back pretty significantly. You look at this on a longer-term chart from 5 years ago, yeah, this stock hasn't done that great at all. Now, that being said, it's true biggest drivers are their business consumer and consumer websites, Tmall and Taobao, and those still contributed nearly 50% of their revenue. So that's going to be a concern. Tariff implications, they're starting to come out with new sites in different areas around the world, especially in Southeast Asia, to kind of offset some of the losses that they're going to see maybe out of the EU, maybe out of domestically here in the U.S. So that's going to be a concern. But I think it's all going to rely on their guidance moving forward and how their AI models, how their cloud computing side of their business is starting to expand. Is it, starting to take advantage of some of the investments that they've had over the past couple of years, which have weighed on recent results. But yeah, this is, it seems to be one of those things where kind of the hedge funds, not only, Biden that we mentioned earlier, but Alibaba also, this is on the radar. A lot of hedge funds over the past, couple of quarters.
Listen, this one has been a strong performer year-to-date, but you get great contact going back several years pre-pandemic, honestly. All right, so let's get into the example trades. Casey, why don't we start out with yours with your approach today?
Yeah, I mean, if you look at the stock, it's still in a little bit of a bull flag pattern, meaning it's a primary trend into it's bullish or moving to the upside. We want to see consolidation a little bit. And once again, you have some headwinds here. This is actually a neutral bearish example when you're looking at this particular trade setup. Looking at a quick diagonal spread going out to the January 26th, buying the 160 put, then going out to November 28th, selling the 150 put. So you're doing this negative $8.50. So the next loss is $850. But what you really want to be able to see is the stock kind of moving to that lower level, or kind of moving a little bit lower here in order for this trade to kind of expand when you're looking at the amount of premium. And if the stock is actually above that 150 level at the time of expiration for that short haul, then you can actually look at layering on a new short put. I'm sorry, you can look at layering on a new put to be able to receive a premium. We can close it off. There's a lot of versatility when it comes to this trade, but the overall bearish direction is obviously to the downside. Looking at that 160 level put as an area to get a little bit of delta for this gain, but also leveraging the higher spot volatility in the near term will offset that trade return. Curious to see your thoughts about this trade.
Yeah, let's break this one down because this is a long term. This isn't an earnings type play at all. You're taking advantage of the higher applied volatility in the near term. But let's break this one down all the way out to the January 16th monthly options here. So you've got 53 days to expiration. Buying the at the money 160 strike, put slightly in the money now, and then against that in the near term, November 28th weekly options that expire in just 4 days, selling that higher applied volatility in that 150 strike put. So a bearish $10 wide, put diagonal to the downside. You're paying less than half the width of it, or less than the width of it. You're only paying $850 debit. There's your risk, $850 per spread. Anything below about 158 is going to be potential profitability. You can see there on the risk profile, you want it to go at or near 150, but you've got probably about 6 or 7 opportunities or potential to roll or adjust that short 150 strike over the duration of the trade because you went out basically nearly 2 months on your long option on the 160 put. As we get close to that expiration over the next 4 days, the idea here is the stock goes a little lower, about $10. That's about the one standard deviation move that the option market's pricing in. And then you're able to, still start getting some expansion on this one. But the idea here is rolling that short option or adjusting that short option to new option series, collecting credits, that increases potential profitability. Every time you collect the credit, it reduces the initial risk on this position. But it's a longer dated bearish put diagonal here with the expectation that the stock's going to fall about that one standard deviation. Constant time decay on this one. Buying a lower applied volatility than what you're selling out in the January monthly options. You're buying about 45% applied volatility on aggregate, selling in the near term about 81% on that short 150 put that you're selling. So that dispersion there lowers the input price on this. But this is a longer dated outlook here for Alibaba, but you still need to move to the downside just slightly. Anything below that break even, probably about 158, 157 could be profitability on this one. You do have some time risk on that short option over the next 4 days also. But there's the bearish outlook dated diagonal. I went to really short term. This is an earnings type of example trade that I'm exhibiting here. Go after November 28th, between cycle expires 4 days. And remember, you got a holiday in there also. Buy either 160 strike call, without a lengthen downside here now by about $1. And then against that, sell the 170 strike call. So a bullish $10 like call vertical, you're going to pay roughly about a 340 debit. You'd probably get it about 15, 20 cents cheaper than that right now. The stock has pulled back from second highs. But the debit you pay on this is going to be your risk on it. So $340 in risk. That can expand to $10 if we get that one standard deviation move to the upside at or near 170. Kevin, your thoughts here on the bullish call vertical here? In short term, you got to be right on it. You got to get above that 163.40 break even.
Yeah, but you're also leveraging that short call to be able to offset that long haul position as well. So you're looking for obviously a move to the upside. We already talked about this bull flag type of technical pattern. If you're looking at the chart, 170 is kind of being an area of resistance for the day. Kind of aligns with that short call that we actually have played here. But you do need to have a move to the upside, and you got to be very quick in order to try to offset this trade in the event that it may go in your direction, Tom. But if it's sitting there around $163, $164, $165, you may actually have to manage that trade kind of stalling out because you also have the $5 crush that we can see. Now, that crush will also occur on that short call as well, with that long call which has limited no delta, you also see that impact here. But it's just defined. There's a reversal. You can also manage that trade if the market is available. But once again, this is pretty much our next down target around that 170 level. If you look at the technical once again, that's actually really key area of reversal. Really something that's going that direction. This trade is maxed out. If it's there at the time that trade.
So both these positions, this one to the upside, you do need to move to the upside about $4 to get above that break even. You get a little bit more flexibility with this one as you have that ability if the market's open, closes ahead of expiration of the next 4 days. If you get the move that you want on this one, this is really short-term positioning on this one. So Diane, there's your full bear debate. Both of these need a move or just get lost in the direction.
Okay, so not so much food you're adventure because you both need a move here. All right, thanks guys. Coming up, we got NASDAQ. Continuing my folio, we'll be along with new data on Dick. Very good. We talked about focus on specialty retailers this week. That's one of them. Keep it right here on Schwab Network. Fast Market. We'll be right back.
Indeed. And I'm his mom.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Sam Linus, live from the New York Stock Exchange. When the market moves, we're on it. Getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade. Even more specialized support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade fluently with Schwab. Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
I don't want to last that right now, bro. I'm live and everything, bro.
No politics, no spin. Just the market from all flows and beyond. Streaming 24/7, any screen, anywhere at schwabnetwork.com. Football Network here on the Squawk Network. I'm Diane King Hall, alongside Tom White in our Chicago studio. Time now for our Cash segment. We're taking a look at Dick's Sporting Goods. For that, we want to bring in our next guest, and that is Andy Swan, co-founder of Lifefolio. And thank you for joining us and kicking off this week with us. It'll be a short week. What you all are seeing when you look across sentiment as it relates to Dick's, because when you think about the stock, it's been an underperformed market so far this year and on a year-over-year basis. What's your take?
Yeah, we're starting to see a nice little divergence opportunity forming here. We think this Sporting Goods has a very real structural edge heading into the holiday. They've got stronger traffic, a healthier customer base, and a higher quality in-store experience than any competitor. It really shows through when we look at Dick's Sporting Goods web visits versus the stock price. We've got the web visits up 31% year over year. At this point in time, heading into the holiday season, we see this as extraordinarily impactful and a very good sign of things to come for Dick's Sporting Goods heading into the holiday season, heading into Black Friday this weekend, Cyber Monday next week. And with penetrating lower, this is a nice diversification. We just think that this is going to be able to get out onto this call and say things are going better than Wall Street expects, and provide a pretty healthy outlook into the future. So where we're at right now, the acquisition of Foot Locker looks pretty decent. I don't think it's fully integrated yet, but this is a company that's executed at a really high level historically, and the Foot Locker data so far is reversing a pretty negative trend. So it tells us that Dick's is going to be able to take advantage of this acquisition and is starting to do so. It should have a pretty good outlook in this quarterly call.
Yeah, Andy, one of the things we've talked about this stock is the fact that a lot of their competitors have gone away, and now the acquisition of Foot Locker just takes another one away. If you want to shop for sporting goods without going to Amazon, where you actually want to maybe use it or touch it or whatever, you have to go to Dick's Sporting Goods now. It seems like, they're the biggest 800-pound gorilla in the room. But the company said last quarter that they haven't seen any signs of slowdown from the consumer. The stock is kind of lagging so far this year. It's a seasonality thing where we always see that big major pickup in your data going into the holiday shopping season. And with the stock down 9% so far this year, it provides that opportunity you guys are looking at.
Bro, everybody celebrates some type of
Thanksgiving. Clearly seasonality with their business, but when we look at it from a year-over-year perspective, it really takes seasonality out of it. And as we head into the holiday season, they're already at a 31% higher level in terms of web visits, which we have seen historically translate into foot traffic and revenue for the company. So when we've seen these setups in the past, the Lifefolio data shows web visits surging while the stock trails. It's been a really nice setup historically, 70-80% win rate when we get this type of setup. So we think Dick's is absolutely prepared to outperform expectations and provide an outlook that continues to be optimistic in the face of Wall Street's concerns.
And let me ask you this. One of the concerns obviously has been the integration of Foot Locker, because Foot Locker has been so weak, and then their exposure to Nike has been challenging. So do you think that one of the key points that investors will be honing in on is how well the integration is going with Foot Locker, and then what does the exposure to Nike look like from here? What's your thoughts?
Yeah, I think that's definitely something that Wall Street's going to have huge concerns about, a lot of questions about on their conference call. We don't have a ton of insight into that except to say that the Foot Locker data that we have looks better than we would probably expect the Foot Locker data to look at this point. The other thing that I would say that Dick's Sporting Goods has going for it is this youth sports ecosystem. They've really built out the House of Sport, Game Changer, etc. They've built out a really nice network that brings young, sports enthusiasts and their families into the store on a regular basis. We think Wall Street probably mispriced that action as well. So the digital side of Dick's Sporting Goods and what they're able to create
in terms of network effect of their client base is starting to really pay off, and we see the Foot Locker expansion only adding to that because it's getting more and more people into that digital, ecosystem that they can continue to market to. So we really like what the company is doing. We think that they're going to have pretty good numbers and a good outlook from here.
Andy, you got an earnings score on this one because the stock's actually below where we were last quarter, where they actually raised fiscal year 25 estimates up, and the CEO basically came out and said every aspect of our business saw growth and did well that quarter, and now we're back below where we were. So what's your earnings score on this one?
Yeah, we're positive going into this. We think that the CEO, what he predicted and what he was saying at the time has absolutely manifested in terms of data that we're seeing. So we don't see any reason why they would move off of that. I think Wall Street has general concerns about the economy, general concerns about the consumer.
It's not bad.
Consumer seems to be rising, and as a result, we think that this company is gaining market share and positioned to really benefit in 2026 as we move forward with hopefully a little bit stronger consumer overall.
It's still the rest of my factory. Did he say?
Thank you, Andy. That's Andy Swan, co-founder of Lightfolio. Appreciate that perspective. Now, for the trading perspective on all things GIGS, I'm going to yield the floor to you.
Right. I'm putting you on charger.
Here to go over the insights from the Lightfolio team. Your thoughts before you guys get into these answers trading.
Even though the company might come out with better guidance like they did last quarter, the overall market has been a little bit rough over the last couple of weeks here. No stock is really immune to those moves. We've broken some key levels as far as simple moving averages. We're sitting right at the 200-day moving average right now.
What's the stocks looking like?
41 level. But they have positive data on this one. And Pubg, when you look at this one, the Oxford is pricing in about $16.70 move either way in the shares. And we always talk about this name, Kevin, on a quarterly basis. The share float is really low. Only 89 million shares outstanding as far as share float goes. So this has that ability to move. Your thoughts?
Yeah, I would agree. I mean, if you kind of look at the fundamental landscape for this business, they've done a phenomenal job managing inventory, continuing to get their customers come into their stores. I think that you're kind of looking at this integration now. The Street did not like it initially. Obviously, there's going to be a lot of headwinds, operating costs, and they're trying to integrate, so there's going to be some problems there, potentially, if they do not see a smooth integration. But if I look at it, over the last 6 quarters, 5 of the 6 quarters, the stock actually did go back and retest this 190 level. So I'm just looking at a pattern and a trend, as you talked about. You actually need a little bit of weakness here when it comes to the stock, not only on the daily chart, but also on the weekly chart. And I'm a little bit mindful of that as well. I think that there's probably a little bit more of a higher bar than we need to get before because of their ability to outperform some of their peers for so long. And so the difficulty that I actually have is actually bearish. Looking at a December 19th, 190 put, it's going out right now in the put at $5.20. So the max loss on this trade is $520. Break-even point $184.80 with a max profit of $18,480. That's if the stock goes to zero by the time of expiration. This is a trade to try to capitalize on a downward move here, Tom. You probably, if you get that move or that reaction post-earnings, you can look at closing it out. But just get a little bit more time in order for a pullback to actually occur or develop here. But you also have to be mindful that you will have some time decay or decay acceleration taking place as each and every day
What'd you say?
And this gets closer and closer to expiration. So slow down a little bit. Try to see if there's going to be a pullback. That 190 level has been the area of support in the past. Look at the stock to go in that direction and then try to process and adjust the trade accordingly if it does go in a direction. And if it does not, if the market's available, you can also close out the trade in the event that it goes against you and you see the stock rock higher.
Yeah, this is a full bear debate here, KG, going on between Lightfolio and your example trade here. But let's break this one down because it's not a pure earnings play. You're going out to December 19th. The monthly options that expire in 25 days, so you've got 3.5 weeks in this position. Just buying the outright 190 strike put, that's nearly $20 out of the money to the downside. So you are going to need a move on this type of strategy for this Kevin laid out. It's got some duration. You don't need that move initially on first earnings. You've got time in this position. But buying the 190 put in December, monthly options that expire on the 19th, paying 520 debit, there's your risk, as Casey mentioned, $520 break even all the way down at 184.80. So that's outside of that 160. Downside on this one. But Casey, as you mentioned, you know, you look at this, you do have the ability to maybe close a portion of this if you get the
should be in the church telling people, like, why
the next 25 days because you're buying
like, why you not in the church being a
but
preacher or something,
my volatility
you should be, like, walking down the street with
that will negatively impact this market. This is definitely need a move.
You don't even sound like that in the house. Like, you be yelling at them kids and everything, bro. Everybody is. So it's a, bro, it's a bunch of hypocrisy and contradictory, bro. So nobody knows what you talking about, what you going on. Like, everybody is looking.
I just go back to the bigger number today because this stock is trying to hang a little bit lower here. You see the last week actually a little bit of a hammer candle on the list as well. So definitely kind of screaming that you could see a pullback in the trade. This is trying to capitalize on that. And in the event that it does not, if we just see an implied volatility crush, which is going in that direction in an aggressive enough manner in order to be able to stop it off the trade. That's something that's very key when you look at the long call, straight and long purpose.
Yeah, and the fact that stock traded around 170 multiple times so far this year over the last 7 months or so. So it has that ability to go down. So there you go, Diane. We've got some more there debate. KEG brought us versus the positive portfolio data.
I know we do.
There's no personal preference. I want you to know what's going on.
Thank you, KG. I'm Kevin Green with Penn City today. Coming up, we've got the breakdown on Zoom. George Sosa joining us for you. The tech company's earnings got more fast market on the other side of this break.
But I feel like, but you can be, bro, everybody, you don't go to church at all, though? You don't pray? So what are you talking about, bro? You sound like you're a little possessed a little bit, bro. Like you're foaming at the mouth or something. Oh my God. Alright. But, like, it's too serious, bro. Right, but if you really want to talk to me about religion right now, bro, don't you know I'm at work? Okay. Okay. Sorry. No, I mean, I can kind of see where it's going with you, man. I'm sorry. You're right.
Stay connected to the market with Schwab Network. Tune in 24 hours a day, 7 days a week on SchwabNetwork.com and on all your favorite streaming services. Schwab Network. Available anytime.
No, I'm crazy. I have to use that word.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from
Right.
Schwab.
I'll apologize.
Learn tips
I do gotta work on that.
navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions or chat directly with an education coach. It's interactive learning at its finest. Tune in live or watch it on demand. Head over to schwab.com/coaching and start learning today.
Welcome back to Fast Market here on Schwab Network. I'm Diane King Hall live on the floor of the big board. Before we get to the breakdown, we're going to check of where market status to get closer to the bottom of this hour. Zoom got names on the board. The S&P 500 rallying more than 1.5%, so we're higher than the top of the hour. Dow's got a gain of a little bit more than 0.5%. NASDAQ 100 up 2.5%. We've certainly seen some strength there led by Alphabet, Google, which is going to do all-time high today. Russell 1000 up 1.75%. Will Zoom again? That's the question as the virtual meeting platform gears up to report results after the bell today. Here's where consensus expectations stand. Investors are expecting Zoom to report earnings of about 43 per share on an adjusted basis. Wall Street will be keen to see whether Zoom can speed up its pivot from pandemic-era video apps to an AI-first virtual workplace. Time now for the breakdown. For that, we want to welcome in George Phillips, senior markets correspondent, alongside myself and Tom White, taking a look at Zoom. So, George, let's get into this about Zoom. It's ticking higher today. Are the glory days possibly coming back? I don't know. What are your thoughts?
Well, maybe the glory days in growth may not necessarily be there. It's essentially growing at around the high single digits area. It's more of a value play right now, to be honest with you, considering the earnings estimates, at least in the next 4 quarters, are estimated to be close to $6 a share, which puts the stock around 13 times forward earnings. But when you look at the earnings for the quarter, it kind of exemplifies this as well. The only 43 estimate is only about 3.5% compared to last year when they earned about $1.38. So a 5-cent adjusted increase per share. If you look at sales, they're $1.21 billion, only higher by 2.5%. So actually, we're talking low single digits here for both sales and earnings. The other things I noticed about Zoom is if you look at the overall market capitalization, about $23.5 billion, they have about $7.8 billion in cash, which is quite large. It's almost actually 30% of the market capitalization of the business. So that's what I mean, like value, maybe a potential here for Zoom Technologies, which again is still one of these businesses which has decelerating trends in revenue growth. Its earnings are actually positive. It is profitable right now in terms of net income margins, close to 25% sales, 600 basis points higher than their 5-year average. But the stock is actually down, ironically enough, in the last year, about 1%. Year to date, it's down 3%, and it's actually quite a bit lower in the last 5 years, Diane, down 81%. But nonetheless, this is an environment where I think some activist investors are looking for value opportunities. AI-centric names out there. George, I think one of the big things is, the competition in this space. We talk about it. Microsoft Teams, it's Google Meet, it's Cisco with their WebEx. There's others out there, but they continue to get those clients and those subscriptions for, $100,000 or more. I think it was up to 4,274 from about 3,900 a year ago during the last quarter. Is that key because it's really a high-margin business, George, but at the same time, we've been talking about this one for the past 3 or 4 years. Like, why isn't somebody buying that? Just like Slack got acquired recently, why isn't somebody buying Zoom Video? Or maybe Zoom Video just doesn't want to get bought, right?
Well, I think the landscape, you're right, Tommy. You look at the landscape, it's quite competitive. Zoom does have a place in essentially the enterprise communication stack. The challenge is the churn rate. You have to look at the churn rates relative to competition, some value proposition that Zoom may provide relative to some of those competitors, which again, from a horizontal and vertically integrated standpoint, Slack, as well as again, you can consider, for instance, Microsoft, those are vertically integrated companies. So there are maybe some businesses that want to use Zoom as an agnostic platform outside of the core ecosystem within, for instance, Microsoft's professional ecosystem of software. But nonetheless, again, growth rates in Zoom are really reflective of the fact that competition has been eating away at their potential. But again, the valuation might be stationary relative to those earnings, which are again only expected to grow in the mid to high single digits, as well as sales again in the mid high single digits.
All right.
1-year chart of Zoom video, that's kind of reflective of what we've seen, ups and downs. It's been a roller coaster. Stock's down about 2% so far this year, but it's just been, I mean, look at that. It's just been choppy, and this is all based on peaks and valleys in this thing. So I looked at a strategy. The option market, while implied volatility levels are elevated, the current IV percentile is only about 54%, so right about in the halfway line of implied volatility levels that we've seen over the last 52 weeks. Option market pricing in about a $5.90 move either way in this one, so about 7% or so either way. So I looked at a strategy that takes advantage of a move, and I don't care if it goes up, I don't care if it goes down, I just want it to go about that 1 standard deviation or more. So I looked at a long iron condor in here where I'm going to get buying out of the money put vertical. This is all in the November 28th weekly cycle that expires in 4 days, so really short-term positioning. We're going to buy an out of the money put vertical. We're going to buy the 76 strike put and sell the 73 strike put. There's the bearish put vertical. Then on the call side, we're going to buy the 83 strike call, sell the 86 strike call against it. So a bullish $3 wide call vertical and a bearish $3 wide put vertical. You're going to pay roughly, you've got a $1.60 debit here. It's trading just about $1.60, but that's your risk. The debit you pay on this type of strategy is your risk. As you can see here from the risk profile, my break-evens on this one, 74.40 on the downside. I need it to go below there to get the profitability, or it goes up to 84.60 to the upside to get profitable on that side. So this is a near move type of strategy. You can see here what I don't want to happen. I don't want it to be between 76 and 83. We're not buying those verticals on the upside and the downside on this one. I've got 4 days in this position, so if you don't get that move initially that you want post earnings after the close today, you've got 4 days in this position for that to happen. So to get that trend moving. Now, if I pay $1.60, there's my risk, $160 with a profitability potential of about $140, but that's above 86 on the upside or below 73 on the downside. So Diane, just taking advantage of, you hope a move happens on this type of strategy of implied volatility level.
Yo. Oh. Already. This is super bullish. Look at this. This is unreal.
But the condition is here. Alright, maybe bearish condition is there. I do not think so.
I'm still waiting for the no interest right now.
She read. She read. She read. And I was like, I don't know.
Be a woman, man?
Read, right?
A human?
Yeah. I like it'd be weird if I asked them for like a glass and food set.
No.
Yeah.
We try glass.
Like, if I was making enough, but yeah, it takes so. I'm just imagining it to be yeah. I need to find a pregnant woman who's going to get one. It's meant to be amazing.
Yeah. You said what? Oh, who? I'm trying to turn this down. Oh, yeah. Oh, no, I didn't see anything yet, though. I see trouble at all. I see somebody calling down in the chat. Just looking at it. I was just about to use the restroom, bro. What else about travel agents? What else? Like, what do you want?
It's a long-term hope.
Okay.
Before your premium Delta moves, your Tata moves faster. That's what it appears.
I'm good.
How old are you?
Being filmed.
I'm just eating lunch, y'all. Well, cousin number joined. Pretty bored by myself. Nobody talks.
you're listening to and hit play on your next adventure. This fall, get double points on every qualified stay. Life's a trip. Make the most of it at Best Western. Visit bestwestern.com for complete terms and conditions.
Competitor until it's to market.
Yeah, I think that's a fair, reasonable
Competitor until it's to market.
Yeah, I think that's a fair, reasonable, take. But we know Tesla doesn't care. Tesla is the stock of expectations and promises.
It's so true. And, I guess for that reason, we need a guy like Elon Musk that tends to make these big promises that then we debate if they'll actually happen. Hey, and history will tell you eventually, most of the time, they do end up happening, to his credit. Just oftentimes timelines are what gets a bit more in the fray as far as the street is concerned.
Liberalization, is that the term you used, Clutter? So liberalization of the timeline.
Liberalization of the timelines is a great way to put it. But we'll leave it there for the top of our show today. Now coming up next, we'll dive into retail as we have two earnings still to look forward to tomorrow morning, those being Abercrombie as well as Best Buy. We'll discuss the latest from the technicals as well as some key sample trades coming up next.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
What's up, Global Nation? It's your number one broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh. Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties. Carl.
Schwab, a modern approach to wealth management.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network. Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The two grandchildren, planning for their college educations. Someday it'll be their turn.
Trading at Schwab is powered by Ameritrade, unlocking the power of thinkorswim, the award-winning trading platforms. Bring your trades into focus on thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Welcome back to Next Gen Investing. It's now time to discuss the latest from the charts as we are looking at two names with earnings tomorrow morning, Abercrombie & Fitch as well as Best Buy. But for more on the technical front, I'd like to welcome in Kevin Horner, Senior Manager of Trading Services and Education at Charles Schwab. Kevin, thank you so much for being with us on Sports this Monday. We'll start things off with Best Buy. Into earnings, not always a name that perhaps is on our radars here, but definitely we could see some volatility on the back of earnings, as there's a very mixed picture right now what hardware and some of the demand looks like then, of course, going forward. So walk us through your technical takeaways here for Best Buy.
Yeah, happy to do so for you, Jenny. We're watching this channel that's been in place going back to the summer. Basically, we've had that bottom in April and really worked off of that bottom around the tariff tantrum time frame, and we've actually tested the trend line from that bottom now 3 separate times, coincident most recently with the 200-day moving average around $74 a share, which also happens to coincide with that volume point of control right around $75 a share. So the stock itself has maintained the channel going back now for more than 6 months. And if nothing else, it could be pointed out that bulls would have the proper risk versus reward opportunity for entrance along the trend line near that 200-day moving average, potentially choosing to move on if it were to break down below that 200-day. So early entry perhaps, but also early entry near an area of support. So if we're wrong as a bull, then you know rather quickly and you can move on from a trade that doesn't work.
Okay, yeah, and today also not giving us much to work with as we're pretty much flatlining here on the session in real time. So appreciate that and the great setup here for Best Buy. Now, as we do look to trade the same, for example purposes, Alex, we're down about 11% on the year. We pulled back about 20% from highs made almost the same exact report a year ago. So maybe we're capturing some upside, but walk us through your thinking here into this earnings today.
Yeah, you look at where this stock sits, I think you have some relatively, I don't want to say safe, but define the support levels that Kevin just went through. You have that channel. If you think that channel is going to hold, perhaps selling a put vertical just below those lines can make sense. It's the November 28th, so it's prior to the end of this week in this example's case, 73.71 put vertical, 50-cent credit, creates a 3-to-1 risk reward. So in this case, $150 is the max loss, $50 is the max profit potential, and the break even would be $72.50. So if you look at the risk profile, it's one that we should recognize at this point. We often talk of this strategy, elongated Z risk profile, where if it stays above the strike and holds that throughout the end of the week post earnings, this one would have a chance to expire worthless. That's your max profitability zone. Break even, you net that credit out, you get to 72.50, and then the risk is capped below the long strike, in this case at 71, and capped out at 150. So neutral to bullish strategy, Jenny. Going into earnings, there's no doubt that earnings will have a large say, and ultimately if this example works out or not. So know that going in, short-term trade, pretty binary to whatever this report is.
Yeah, and of course, obviously, very customizable, but we'll be watching this report as it releases tomorrow morning. There's still earnings, of course, to get through this week, and our next name today is no exception. Abercrombie & Fitch also with its earnings tomorrow morning. And Kevin, this is a very different Abercrombie & Fitch than we were talking about, say, a year ago, as we've just seen this really slow, painful grind to the downside. I mean, we pulled back now 57% this year. This was at one point one of our real leaders of retail. So walk us through the latest on the technical front.
Yeah, you're absolutely right, Jenny. It's a great reminder of why traders employ exit strategies when trends break down. This is a good example of just that. We've basically found support of late in this ballpark of around $65 to $67 a share. My green line resides at 65, the same lows from, again, the tariff tantrum we had back in early April, and we're testing those as we speak. So, again, an area where the stock is at a level of what can act as support, and the question becomes, will it? I found the opportunity from the earnings period here looking for about an $8.50 move one way or the other, so the IB is certainly high on this. The interesting aspect to me is that if it does have a positive move, if it reacts in the way that the IB implies, that would take it up to about the 50-day moving average, which could easily be another layer of resistance beyond the 20-day on my chart, which is the orange line. So momentum-based opportunity under 65, but any rallies maybe into the 75 area and the 50-day moving average could be bearish setups if the trend were apt to continue thereafter.
Okay, so zooming out here, looking at some of that maybe perhaps pessimism we've seen, and of course the tariff tantrum, I love that term, I'm going to definitely steal that, which has really rewritten a lot of the price this year. As far as bigger picture, do you see anything different when you zoom out and look at the longer term time frame?
You know, the weekly chart doesn't really extend to a whole lot of comfort necessarily. It does reiterate the importance of the $65 level, but I did call out on a weekly view here that 46 momentum-based move, but I think traders are going to be positioned at this $65 level and basically let this earnings dictate the next move.
Yeah, and earnings will definitely be tough because we're down about 5% here in real time without any major news catalysts yet. So we appreciate it, Kevin Porter, for the technical insights today. Now, as you trade Abercrombie & Fitch here, Alex, for example purposes, again, a very different performer than what we've become accustomed to, but perhaps, utilizing some of this weakness here for an example strategy.
Yeah, I also think, too, Kevin's point is a reasoned one, right? Like, sometimes it's just the decision is just to wait until after, have that results and that price move give you some idea of what you want to do. But say a trader wants to put on a trade, sees an opportunity here in this sell-off in these shares over the last year plus, but wants to do so in a risk-defined way. This is a call calendar spread, so it really keeps the notional exposure in check by, in this case, only risking $25. 25 cents is the debit on this trade, but it's a 75 call calendar. So looking for a sharp momentum-like pop on perhaps better than expected news if that were to come. It's the November 28th, December 5th call calendar, again centered at the 75 call strike, Jenny, 25-cent debit. You see the risk profile. It's a mountain top-like peak here. Best case scenario is they move to those strikes. Now, the nice thing about this strategy, whether it's the call calendar or the put calendar, you can customize this based off of the expirations to meet that time frame or the strikes to better reflect where you think this stock could be over said time frame. So in this case, one way to look at it looks for like a $10 pop in the shares up towards 75 by the end of the week, but it could be customized and changed to better reflect. Because the most critical thing here is precision, and the closer you can be, the better chance it has to be profitable.
Okay, yeah, and hopefully we see some degree of optimism outlined by management because all of these retailers have seen such critical, really scrutiny from the street regarding forward-looking guidance, which has been such a critical point for a lot of these companies. So we'll leave it there for Chartmaster today. Coming up next, though, we'll dive into the box office latest as we are seeing Wicked for Good shattering some weekend numbers as far as the box office was concerned. So we'll discuss the outlook for the box office as well as some key catalysts ahead coming up next.
For instant reactions, earnings breakdowns, and hot takes that teach you about stocks and markets, follow me on X at @NPetalidi and connect with me, Nicole Petalidi, on LinkedIn, Facebook, and Instagram.
Trading at Schwab is powered by Ameritrade, unlocking the power of thinkorswim, the award-winning trading platforms. Bring your trades into focus on the thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable content. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The two grandchildren, planning for their college educations. Someday it'll be their turn.
Welcome back to Next Gen Investing. It's now time to discuss the latest at the box office. And we're now joined by Sean Robbins, founder and owner of Box Office Theory, for some more insights. And I do know that, of course, Sean, Wicked 2 came out, saw some really strong numbers from over the weekend. And is this enough to propel, hopefully, some of the enthusiasm tied to the box office for the remainder of this year?
this is the weekend moviegoers, theater owners, studios have been eagerly waiting for. The box office in October was historically bad. There's just no two ways around that. But all eyes have always been on the calendar at this point from Thanksgiving through Christmas and New Year's. A string of blockbusters to come, and certainly Wicked for Good is off to this big start, topping the first film by $35 million on its domestic opening. So Universal and the industry couldn't ask for better news right now.
Sean, is this going to be the biggest weekend of the year, perhaps, for movies? You got Zootopia 2 on the slate.
It's very possible. I think that's a powerful combination. The standard bearer for the year is a historic Memorial Day weekend that saw Lilo and Stitch and Mission Impossible break records for that holiday. But, even if Thanksgiving comes in second to that, it very well could top it. We'll see what happens. It's still the kind of setup for a holiday run for Zootopia and Wicked both. A lot of kids eager to go see a big sequel like that, especially since there hasn't been a major animated release since the summertime. So I think there's some built-up demand there.
Okay, so is there any added appetite for some of these more premium offerings, like say an IMAX, or you're going to see a theater at, say, with like a dine-in experience? Is there a consumer interest in that, or are you right now seeing consumers more interested in, hey, get me to this given movie? I don't really care necessarily the viewing type of experience at a given theater.
Yeah, there's always some element of FOMO, of fear of missing out with a big event movie, but there is this increasing demand to see these movies in the best possible way. Wicked drew an incredible amount of its business from premium screens. That's been part of the trend, part of the narrative for most of the big blockbusters, and we see theaters responding by trying to add more of these screens, whether it's IMAX, Dolby, RPX, 40X motion seating. There's so many out there. IMAX is the most popular and the most well-known. I think we'll see a combination of that over the holidays. This is the time of period where people are on vacations from work or school, so they can wait a few extra days to see it on IMAX or one of those premium screens if they can't get great tickets for opening weekend.
Sean, as someone who's made a career of following this space, perhaps you'll have some insight to this question, which is a little bit more bigger picture. Tremendous disruption during the pandemic timeframe to this space and behavior habits. It also changed, though, I think, the release patterns and how quickly things went from theater to streaming or at home. Has enough time passed? Has life changed back to let's say the pre-COVID normal enough that consumers are preferring again to go see big movies? And if so, I know it's kind of a longer question, is this going to be more reflective on the quality of the films than it is the actual activity?
Yes, I mean, we could talk for a long time about all of that. I think the shortest way to put it is we are as close to normal as we've ever been at this point. The movie industry took a little longer to get back there because of the strikes, which further disrupted the post-COVID recovery. We're now at the point where shorter windows are a major factor for studios and theaters, and consumers have come to expect those. They know they don't have to wait 3 or 4 months to see a movie at home anymore. They can wait 4 to 6, maybe 8 weeks tops for bigger releases. That's a factor. The quality of films is a major factor. Word of mouth spreads faster than it ever has before, thanks to social media. That's been the case for 15 years. That's not going away. But at the end of the day, the experience of going to a movie theater, when it's the right movie, when it's a good movie, and when the experience itself in the theater is great, it's still impossible to be replicated at home. But we do see consumer choices and habits permanently changed. That's just a face of reality for the business.
Yeah, so to speak to that, are we seeing still those stubborn consumers and maybe perhaps a growing amount of the population that it says, I will never go back to a movie theater, I will wait and see the movie? I mean, I believe eventually you'll be able to rent, say, like Wicked for Good for like $20, you can basically own the rights to the movie. Are there those growing amounts of consumers that are opting for that option that just disregard this theater experience as a whole, which I say with painfully, because I'm definitely a theater goer myself, but I do know there's some that say I will never go back.
You're right. Again, we have to look at the facts as they are. There is a segment of that movie-going audience that is no longer a movie-going audience, or a very rare movie-going audience. We do see statistically most of them are in the older demographics, usually 35 plus, which is not abnormal historically speaking. It's just happened much quicker, and it's been expedited because of through COVID, through the rise of streaming. This shedding of an older demographic has happened much quicker than the industry was ever prepared for or ever could have countered. That being said, the encouraging sign is that younger audiences are coming out. They're driving horror films. They're driving things like Demon Slayer and anime movies. Video game movies will be a big trend, I think, for the next decade or counterbalances to all of these things. So yes, it's fair to say there are people that won't go back, but there's also a new generation of moviegoers coming up that are discovering this experience, and they'll carry it on.
When we look at the type of films that studios are working on, it seems like we go through these trends. Marvel and superhero blockbusters kind of dominated the 2000s and the 2010s. And then it seemed like we had that time where it was like rehashing old movies. Are we in the biopic time right now, or is that already passed as well?
You know, I think biopics will never go away as long as there are famous people with interesting lives to make movies about. I know that, you know, eventually it just seems inevitable there will be a David Bowie movie. Like, that needs to happen. We know the Michael Jackson movie is coming out next year. You know, your mileage may vary on some of these. Obviously, the Springsteen film was not as big as something like A Complete Unknown last year, but at the same time, you know, different circumstances. I alluded to it, I think, a minute ago. To me, the biggest trend to watch for, and we've already seen things like Minecraft, Sonic, Mario, and other things play into this, video game adaptations into feature films is really the next big wave. We already know that Resident Evil, Zelda, the next Mario film are coming down the pike, and that's just to name a few.
And we didn't even mention the newest Avatar movie, which is what is definitely going to get me back to the box office, back to the movie theater. That's what I'm watching for this holiday season. But we so appreciate it. Really great read on what we're seeing as far as the box office trends. Sean Robbins, founder and owner of Box Office Theory. Now, coming up next, we'll dive deeper into the world of AI and how that pertains right now to overall marketing trends. We'll also be discussing some of the overall trends we're seeing from Novo Nordisk, which has had some negative news today. We'll dive into with Dan King Hall coming up next.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please. But there's a... Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me, too.
Let's move on, shall we? No can do.
I'll get out here.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are. Morning movers bring traders the biggest headlines to start the day. From volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, morning movers only on Schwab Network. Welcome back to Next Gen Investing. It's now time to discuss the latest with Novo Nordisk and some disappointment out of a trial that was regarding its Alzheimer's treatment with semaglutide, of course, the active component that's found in the biggest weight loss drugs like Wegovy as well as Ozempic. Joining us now is Dan King Hall, the host of Morning Movers, for some more insight on this. So Nova taking it on the chin here a bit today. I will say, actually, we've eased a bit off of some of the earlier selling, but still not the headline you want. So walk us through the story, Dan.
No, definitely not the headline for, I guess, long-suffering investors in Novo Nordisk. So the shares remain under pressure today, but they are off of earlier lows and indications in the of Alzheimer's. It did not, the pill version, they said it showed no meaningful benefit. It's scrapping a planned extension of the trial. So you've seen the shares under pressure today, down about 5%. So again, off the lows of the session, but it's extending a year of steep losses for Novo Nordisk. If you look at the ADR year to date, down more than 45% on a year-over-year basis, down more than 50%. And off the heels of this trial, you have HSBC downgrading Novo to a hold. And it's not just about this trial. They say their downgrade reflects concerns that Novo could struggle in 2026, dealing with a few challenges, price declines, generic competition, and just weaker trends for its diabetes drug, Ozempic, which has the same compound or active ingredient, I should say, as Wegovy, the semaglutide. So HSBC says there has been some medium-term volume growth in the obesity drug class, and they see some possibilities with lower prices. But again, there is, they need more evidence of execution before regaining some confidence here. And so again, the Alzheimer trial, the failure of it reaching the results that it wanted to reach it's not their only issue that they have with Novo Nordisk. So again, just the pressure is on Jenny and Alex.
Diane, I think this also highlights the difference between when you're a company that is very, very concentrated to one drug type, and you compare it to like Eli Lilly, which has a pretty substantial exposure here when it looks at its Mounjaro business, but it has other things going on. So it's like that explains the massive divergence. And so you read these stories like, oh, they were looking for more use cases, didn't really, it kind of failed that trial. That hurts that potential use case. I think it makes a lot of sense, and I know it's a stock that's been under pressure, but it's so exposed to the use of these GLP-1 drugs. If there's less use for them, probably should be negative news. Does that make sense to you?
Yes, that does make sense.
Can you hear me?
And also, your point about Eli Lilly, it reflects why it managed to shake off, because earlier there was a thinking that Eli Lilly was
we gotta make sure this is not too loud for you and them.
down as stock has regained some ground, little change on the day, but a little bit higher, we should say. And in terms of the year-to-date performance, complete opposite of Novo Nordisk. The stock has been outperforming. Market cap has hit $1 trillion. It's regained that it hit last week. Again, that says something because it's not what you see usually in this space. It's healthcare. This is the first healthcare company to reach a market cap like that. So to your point about the diversity of its bench, it has more of that than Novo Nordisk does.
Okay, and so I know Novo Nordisk is obviously got base here in the U.S., but as far as some of the U.S. competition, I mean, I know that we talked about this extensively, but that it's not so much just a Novo Nordisk story anymore versus Eli Lilly or some of these companies, whether they are facing FDA scrutiny or not. We know that the name of Cleveland Heart has really added another row of competition into this war.
Taking it easy today.
Yeah, that has been one of the challenges, but Emirates has been volatile also.
I ain't heard nobody all day, bro. How long we got into the market? Let me see. How long we got in the market? I don't know, because I wasn't looking at everything.
Look, I've been growing
Not today, I wasn't.
vegetables inside my house
Not
since
yesterday.
last December. While my neighbors were stressing about skyrocketing produce prices in March,
Culinary Collection by Cuisinart. Compatible with all stovetops, including induction. Contoured, elegant design. Oven safe, easy to clean. Includes a bamboo turner and spoon. Cuisinart Culinary Collection.
This is the 2026 Nissan Rogue. It's the most powerful Rogue ever. Nissan, #1 in new vehicle quality.
look, I've been growing these 7 vegetables inside my house since last December. While my neighbors were stressing about skyrocketing produce prices in March, I was cooking fresh greens from my windowsill every single day. The crazy thing, 4 of these actually produce a better harvest indoors than they ever would in an outdoor garden bed. Stay with me, because indoor veggie number 5 is seriously...
A bunch of them. What? I can't understand what you're saying.
Mutual funds.
You say what?
So Gabby look at the market.
Alright.
You can't trade, bro.
I said okay. You told her to look at the market.
You make a big. How to add these buttons.
I'll probably. I gotta get around to it, bro. This is a rough week, bro. You know we got Thanksgiving coming up. Like, I can't do everything.
Yes, you can.
No, I can't.
Yes, you can.
No, I can't. I can't do everything.
Yes, you can.
Not right now, I can't. I'm behind on on Sunday's video. You got to start putting some videos up. Everybody else got videos up.
Well, who did I think about it? I gotta jump in text.
Right, I gotta charge my phone. I gotta wish for.
It's time for me to get active.
Yeah, it'll come. This is the wrong day to get active. Which I got me here, so there's the market at least.
The Q is up 2.56% today? The fuck? Well, we can do it.
Oh.
What's your best habit? Yeah, how do you learn? You gotta retain. How do you do that? Just reread it?
decision.
Hope everyone's gearing up for the holidays. In a Chevy of their choice. And it all comes together in a Chevrolet. Chevrolet, together, let's ride.
Yo.
Index funds, mutual funds, hedge
You said
funds,
what?
or ETFs? I'm sure you've heard about
Why
this
didn't you ever
before.
join the party?
In this video,
Why
I'm
didn't you
going
ever
to
join the party?
explain these types of investments in a super simple and practical way. We'll
Oh,
start
okay.
with what a fund actually is, then go over the different kinds, how they're managed, the risks involved, the fees you might pay, the strategies they use, and most importantly, who they're really meant for. So please, give me 10 minutes, and I'll give you the knowledge most people take years to figure out. But first of all, I would like to make clear that
Why is
this is
that?
not any kind of financial advice. Alright,
Just let nobody tell
before
me what you
diving
said. You
into
gonna
every
join
kind
the
of
party?
fund,
I'm by
first
myself.
let's understand what a
You
fund
know, just like,
actually
damn,
is.
you up, but you ain't up.
Imagine you and
You
your
ain't
friends
talking.
are organizing a
So I'm just
birthday
like,
party.
alright.
Instead of one
I
person
mean,
buying
I only
everything,
turned it off because
each
of
of
you.
you puts in a little money.
So you want
With
to talk
that
in the
pooled
chat,
budget,
but you got
you
a
can get
phone and
food,
all that.
drinks,
I was
decorations,
just like, alright.
cake, and even music. No single person has
I only
to
turned
worry
it off
about
because you told
covering
me to.
everything, and everyone gets to enjoy the full experience without the stress of managing it all alone. That's exactly how a fund works. A group of people pool their money together, and that money is used to invest in a variety of assets like stocks, real estate, or bonds. Instead of trying to manage each investment yourself, the fund handles it for you, and you get to share in the overall results. Now that you've got a clear idea of what a fund is, let's dive into the different types,
Everybody who comes in knows how to
starting with
separate.
index
I'm
funds,
just
which are probably the most talked about on social media. You've likely heard influencers or finance creators say things like, just throw your money into an index fund and forget about it. But what does that actually mean? Alright, an index fund is a type of fund that doesn't try to pick winning stocks. Instead, it simply copies a list, or index of companies. But what exactly is an index? Think of it like a scoreboard or a sample group. It's a list created to represent a certain part of the market. For example, the S&P 500 is an index that tracks 500 of the biggest, most established companies in the United States. The bigger the company is, the more weight it has on the index. If the S&P 500 goes up, it usually means the market as a whole is doing well. There are all kinds of indexes out there. Some indexes track tech companies in the U.S., like the famous NASDAQ. This index includes giants like Apple, Microsoft, and Amazon, and it's seen strong growth over the past decade thanks to the rapid rise of technology. Then there are industrial-focused indexes, like the Dow Jones Industrial Average, or just the Dow. This one tracks 30 large, well-established companies across different industries. Think Coca-Cola, Boeing, and Johnson & Johnson. There are also indexes for small companies, international markets, emerging economies, and even specific sectors like energy or healthcare. I think you got the idea. No picking, no guessing. Index funds are passively managed, which means there's no one actively choosing what to buy or sell. They just follow the index. And that's actually a good thing, because it keeps the fees super low. You're not paying for a manager, just a system. Most index funds charge an annual fee, called an expense ratio, of anywhere from 0.02% to 0.20%. That means if you invest $1,000, you might pay just 20 cents to $2 per year in fees. Incredibly, right? Some of the most well-known companies that manage index funds are Vanguard, BlackRock, which runs the iShares funds, and Fidelity. Index funds are also known for being low risk, relatively speaking, because your money is spread across hundreds of companies. If one company has a bad year, it probably won't tank your whole investment, depending on the fund, of course. Before we move on, there's something really important to understand about how index funds work, especially when it comes to buying and selling them. Unlike stocks or ETFs, you can't buy an index fund at any time of the day and lock in the current price. Instead, index funds are only priced once per day after the market closes. That price is called the net.
Who is there? I mean, shit. Like, if you drive it, just drive, bro. It ain't that serious, bro. Bro, I've been telling you that all morning, but now you drive. Yeah, I know it's not. Yes, sir. Like, all this ain't organized, bro. Like, I wasn't trying to get on that. So, I'm not up. I'm over here sorting through all my fucking files. Yeah, like, man. I'm trying to try to get on. But you can't get on. I was just like, bro, get on. Like, I already had texted you and told you all that shit. You came on, left. You didn't follow. I was like, oh, fuck. I forgot. I am still on phone now. You just gotta say something. I'm like, always stay on for y'all, right? Is that what it is? Just always be online. Just you just get less invites when you offline. That's all it is. All right. All right, my bad. It's one of my cousins. My bad, y'all. I don't know how loud that is. You said what? I don't know how it sounds. Well, once you should be able to listen to it. Like Bob, I can't. That's why it's hard. You said what? I can't understand you.
Kroger shoppers get up high quality and down low prices. Kroger, fresh for everyone.
So you think you know Wix. Do you really? First up, we've got shit.
Nice, boring music. Oh, there we go. It's not too boring. It's very boring. Was that too loud? I'm right in front of it. So was that too loud? Q's looking good. Oh, oh. All this stuff is bullshit.
the polls could be highly uncertain, but you're seeing that revival and that rebound in the AI space. You're seeing Google authorizing some big amounts of highest watch time, seeing watch time too, Microsoft, others in the memory chip space also. So that's kind of leading the market, right? Information technology, communication services doing really well today. Now, hard to push back against, even though our key sectors are underperforming. Consumer staples, energy, even though crude oil is up over 1%. So it's still a little bit bifurcated at this point, but after that slide that we saw last week, the weakness that we've seen so far in the month of November, it's not surprising that we're seeing sort of a relief rally after those that commentary from New York Fed Governor Williams last Friday, stating that, hey, we're due for another 40 basis point cut in December. Because I think that caused a lot of the volatility early on in the month of November due to the fact that things came down to like 35%, but we're now back above 75%. So that is a little good news, I think, for markets here. We still have to wonder over the next 4 days. It's only about 1.5% above the current share price. So, yeah, there are small lots across the board with like people still in, getting elevated during this period. So.
Okay, thank you for that. And I've heard that early on that this share was just not as popular as the Pro and Pro Max. Let's move on and talk about the bullish trade that you found on Alibaba. I mean, obviously we have a few good things happening, but that one stock pop, woo, it's been great.
Yeah, it's doing well. It's just $10 million downloads. If you look at the stock, and it's had a great year, I mean, so up nearly 90% so far in 2025. But then you look back, I mean, this stock is basically back at levels that we saw in 2019. And far after those all-time highs that we saw 3 years ago. We've now knocked our price, which is not a great looking price. And now you're starting to see some of the hedge funds, some of the money managers starting to say that there's some very timely returns over maybe some of the market temperatures that have gone up pretty significantly to all-time highs. So you'll get earnings tomorrow morning before the aftermarket comes in about a plus minus just over 6% move either direction, just over $10 on this name. Earnings pinned at about 66 cents a share. That's a decline, nearly 70% from the prior year's quarter reported. And then revenue supposed to grow just over 2% to about $34.4 billion. I think one of the underlying trends here in Alibaba is the monetization of not only the cloud side of the business, but then also the AI side of the business, because they still make a lot of their money from that business to consumer Tmall and Taobao at this point, so they're trying to diversify even more. Saw a lot of people pumped up about this one. We've seen the rally from where it is. Just saw that comment also. We'll see out there in this period, we'll see out there. So not really any stuff though. The biggest level is 10,000 of the 170 strike pad. Closing on the 7th at about $2.10 under the pad. So the very beautiful for this figure is 176 to the upside. We'll see what above over the next 4 days. That's not 7% above the current share price. In their ability to achieve earnings functionality, high volume, nearly triple the daily volume that we've seen over the last 5 trading sessions. So a lot of growth activity in Alibaba going into this earnings report.
It's a good news in AI execution and how confidence you're really well secured. But we're also seeing some of the stocks as well now in terms of that secondary NVIDIA laptop. I mean, the stock is still up. We're almost 90% this year, 5-year, 40%, and 10.50% up. So some great performances there. Top line great. Tuesday we saw up everywhere on this quarter. The top line right here on the Wall Street Journal. Great to see there on Tuesday for us. And we're going to take a look at the market. What do you think of the duration? Was that it? Was that the bottom? Maybe not. I don't know. Let's see what our guest says. You want to know what's next? Remember that chat. You can chat me from moneybreak.com when you're on there.
At Etsy, we know the holidays are already exciting, but we can't help adding a little extra joy to the season. Get up to 60% off original gifts from small shops with Etsy Cyber Specials. Terms apply. For gifts that say, I get you. Shop Etsy.
And here's where you win. Smart, fast, and always live from Wall Street to your screen.
I can feel I'm changing. I don't know if I'll ever go back. All the ways that you make me, got me off on the things I like. I don't ever wanna lose you now. So I think I might give in.
90 new iPhones to choose from, including a brand new addition joining the lineup. There's the new iPhone 17, the groundbreaking iPhone Air, a completely new member to the iPhone family, and finally, iPhone 17 Pro and iPhone 17 Pro Max. iPhone 17 comes in Sage, Miss Blue, White, Black, and Lavender. iPhone Air comes in Light Gold, Cloud White, Space Black, and Sky Blue. And iPhone 17 Pro and iPhone 17 Pro Max come in Deep Blue, Silver, and Cosmic Orange. Let's take a look at the differences between them and what makes each one so great. iPhone 17 is now even more amazing. It has a 6.3-inch display with ProMotion up to 120 Hz and is protected by the new ceramic shield on the front. It's powered by the new A19 chip. It has a 48-megapixel dual fusion camera system and comes with a new center stage front camera designed for a next level experience. Next, iPhone Air is an exciting new take on iPhone. It's the thinnest iPhone ever with the power of Pro inside. It features a 6.5-inch display and is powered by the new A19 Pro chip, packing Pro power into a slim design. On the back, a 48-megapixel fusion camera system gives you the versatility of two advanced cameras in one. And it has the innovative center stage front camera for better group selfies. iPhone Air is also protected by ceramic shield on both front and back, making it incredibly durable. Then there's iPhone 17 Pro and iPhone 17 Pro Max, our most pro iPhones yet. iPhone 17 Pro has a 6.3-inch display, and iPhone 17 Pro Max has a 6.9-inch display. Both are powered by the new A19 Pro chip with 6-core GPU and cooled by an integrated Apple-designed vapor chamber for better sustained performance. Both feature the all-new aluminum unibody design for increased durability and are now protected by ceramic shield on the front and back, making the back 4 times more crack resistant. They have our best ever camera system with 3 48-megapixel fusion rear cameras and the longest ever optical quality zoom in an iPhone thanks to the new telephoto lens. Not to mention, iPhone 17 Pro Max has our best battery life ever. They're all amazing options.
Major catalyst for this pullback. So we really think it's just a deleveraging, a healthy pullback after a huge move over the past 6-7 months. So yeah, we could easily see new highs as soon as the end of this week if the market keeps moving like it is.
What about 7,000 and 8,000?
Yeah, 8,000 would be definitely a little aggressive, but anything's possible. If you look at where we are, even though we're only a few percentage points away from highs, consider this. On Thursday, just 31% of the S&P was above, the constituents were above their 50-day moving average. The NASDAQ, that number was 27.7%, small caps 26%. So if you kind of look across the space, there's a lot of room for some explosive upside, and a lot of names continue to be oversold. So it's really just a handful of names that are keeping us right near these all-time highs. So we could absolutely get the fire started again and approach 7,000.
Lucas, thank you. Lucas Downey, co-founder of MoneyFlows.com. Thank you, Lucas. Coming up next, let's talk more about the AI trade, as there is some optimism, and there's ways to do this. There are 3 stocks and 3 different types of sectors that you may want to put on your watch list. Our next guest will explain in detail.
Excuse me. Alright, give me a second, y'all.
Even Grinches get trees. The best gifts cost less, but go fast at Five Below.
Everyone's gearing up for the holidays. In a Chevy of their choice. And it all comes together in a Chevrolet. Chevrolet. Together, let's drive.
You could have done better. Same goes for Lady with Val. Level up and press one by Schwab.
And Q's bouncing.
As you recall, an A and an A
you have to remember the last time you and I spoke, we talked about Google, and we're all in on Google as well. Google continues to be, when you have 2/3 of every set of eyes in the world on one of your search, on your YouTube, on one of your divisions every single day, that's something that is not only useful in their address, but also in their analysis. Sometimes you just have to read the room. And Google's going to be there no matter what device you're using, whether it's a desktop, whether it's an iPhone, it doesn't matter. People are still using Google for what they are known for and what they continue to spend on. Gemini continues to be a very big player inside of this market. And if we start to see some of the tech developments out of Apple, that's going to continue to drive our outlook on them forward into 26 and 27. But Google for sure is right up there with us in the tech sector that we're watching very, very closely. Continue to be very excited about.
And we're going to spread it out a little bit. I mean, you talk about AI energy. That would be Terra Energy. How much of the side do you name like this have? I'm pretty excited that it's going to 40% higher on your stock today. I mean, they didn't 100%. Are you talking 10% or are you going to talk 40%?
I'm going to give you 20. So we see target right here around 105 on next there. And, we're trading today 83-ish. But we see target right around 105. And when you talk about where this is going, you need to be able to have someone has to feed the grid. You have to build the line. You have to deliver the power. That's where we think, next era thinking, the electrification of this build, the AI compute, all the cloud expansion needs reliable and increasingly dependable power. And we think that they are very well positioned for this wave, that's for sure.
Yeah, and quickly on Caterpillar, how is this an AI play, and how would you describe it as the AI play?
It's not the sexy play, that's for sure, Nicole. But when you talk about someone being there to build the factories, the data center, the infrastructure, the plants, that's where Caterpillar comes into play. From factories to all the installations, Caterpillar's equipment is what is needed for the physical build out of the digital economy. That's why we're very excited about that. 550 to 650, we'll see their price, that's for sure.
Oh, okay. Thank you so much. Thank you. Senior Vice President and Finance Wealth Advisor. Thank you, Greg. Coming up, some Black Friday, we ready to shop? Some of the sales have already begun. We're going to talk about this next on the watch list.
markets is relatively strong, inflation is lower than last year, and the recession that's always 6 months away is still 6 months away. So I just don't see what's going to stop it. And we're seeing good response to themes. And themes sold well last month, and themes sold well the month before that. Look at last month, we were already up, what, 4.7, something like that, about 5.7 the month before that. So we easily be 4 or even better for the holiday season. But I'm going with 4 because I do think there's some strain. We know the lower end isn't doing well. We know they're not spending. We know the upper end is spending really well. And we know somewhere in the middle all starts to break. But we saw great numbers this past week, right? Walmart came in well above 4%. Admittedly, Target came down 0.7 negative. But that big spread of 7% is really strong performance by Walmart, not the fact that consumers are strong. So I think we're seeing really, really good numbers, relatively speaking.
And Brian, are you expecting strength or more weakness in the quarter of these holiday shopping season? And if so, what names stand out to you? Why?
Well, I think, first of all, thanks for having me on. And I think to echo Jan's sentiment, I think the retailers that understand 3 things together are going to win disproportionately. The ones that understand that the consumer is wants to spend a bit cautious. If you look at the University of Michigan Consumer Confidence Survey, it's at an all-time low. The confidence was all in a different place. So I think that, and the other big piece right now is that the retailers that are leaning in strong a value-centered value proposition. According to MasterCard, 86% of shoppers are going to be purchasing across retailers this holiday season, and about 2/3 of which, according to, about a third of which, according to Community, are going to use AI to do that. So there's value centricity, but then the ability to be connected to the shopper, both in an omnichannel way, in terms of digital and physical retail. Increasingly, shoppers will be using AI to navigate their choices, navigate value and prices, and the retailers that are tech forward, like a Walmart, which is all that example, are going to do well. But the retailers that, again, consistently do well right now are retailers with more strong value-centric and emotional discovery propositions, like the Pubg, which also continues to outperform the marketplace as well. So I would say that if you look at Walmart, TJX, and then the usual suspects like Sephora, I think all do very well.
Right. You know what's interesting, again, you noted that back to school was good, Halloween was good, and you were going through everything from digital to electronic. There were some bright spots. Tell me about that. You sporting goods maybe was that was a bright spot. Tell me a little bit more about that.
Well, if you look at last month, digital products were up 22.5%. So, okay, the internet's still doing fine on stuff. But the clothing and accessories were up almost 8%. That's at a time when tariffs are really impacting that part of the business. The customers still pay for it. And then, to your example, sporting goods, hobbies, books, and music were up over 7%. And general merchandise, which is everything basically else, was 7%. So you had to get all the way down to things like building and garden supplies, furniture, and home furnishings to get bad numbers. It was just a pretty solid consumer. And I don't know why it changes this month, other than the shutdown, but I do think we're getting back whatever we lost in the shutdown. So I don't think that's going to be a real issue, and I don't think it's going to be an issue for Black Friday getting into the holiday season. So I'm pretty optimistic, and I agree. The Bureau Commission could be been worse, which tells you don't want to be running for office as an incumbent. But other than that, I don't think it tells you much about retail.
Right, understood. Brian, when you look at the bright spots here, I mean, you did give us some names that you think could do well. I mean, there's different categories from, big box or department store or fast fashion, luxury, athletic wear. I mean, is there anything that seems to work or may have value for consumers this year, Brian?
Well, I think that there's a couple of things. One of which is that, especially with younger shoppers, they're actually looking to get experiences as much as, or a little bit more than they have in the past. So, to borrow the comparison that Jan used earlier, I would expect to see a slight increase in non-stuff, if you will, and looking at how shoppers might do some of that. But I think across the board, when you're looking at the winning retailers at the holiday are going to, I think, be the ones that have been consistently winning all year and have been winning for multiple years, and that's the Walmarts of the world. Costco doing
10.2% year-over-year growth. That was impressive. What about luxury? Are we looking forward to luxury, Jared? What might work there?
I like luxury to a degree here. I like Bruno Cucciarelli. I like LVMH. I even like Terry, you know, and Gucci being out of favor really hurt them, but it's kind of coming back. So I do like them, and of course I always like Hermes. So I like that real luxury, but I also like Tapestry and Ralph Lauren, which I would call near luxury, because I think they're going to do well. And I also like people who are selling real clothes as opposed to like just activewear. So I like PVH right now, and I like Urban Outfitters, and I like Aritzia, because I think that we're back to being that customer. And then anybody selling Western, right? Levi's, Contour, Tractor Supply, Boot Barn, anybody in that side of the business, even including Casey's General Store, because these stores are back. I like those kind of businesses too. It's a pretty healthy customer. I don't think we'll see people do poorly who are not well prepared, and we'll see small players do poorly, because it's really a bad time to be small, poorly capitalized. Those people will grow. Yeah. If you're a big solid retailer and you've got your ducks in a row here, you're going to do fine for holiday.
Yeah, thank you. Great to see you both, Jen Hutchison and Brian Gildenberg. Happy shopping, everybody. Wonderful to see you both. Thanks for being with me. I'm Nicole Pettolini, right here on the floor of the New York Stock Exchange every day on Schwab Network for Opening Bell and the watch list. Market closes next.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome to Schwab Network, where real-time market coverage meets expert strategy. From the opening bell to the closing bell, we've got you covered. Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute. With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings. So that would be a further downside area to watch.
Log insights, actionable data, data traders, and trusted financial journalists. Streaming live and on demand. Schwab Network, streaming 24/7, anytime, anywhere, free. SchwabNetwork.com. 2025 kept investors on their toes. Now, get ready for the road ahead. Join Schwab's panel of experts on December 11th for 2026 Market Outlook. Your guide to the forces shaping stocks, global markets, inflation, rates, and more. Hear from experts on where the markets may be headed, spot opportunities, and see what will drive your portfolio next year. Tune in on December 11th at 7 p.m. Eastern on Schwab Network. I'm Nicole Pettolini at the New York Stock Exchange. Live interviews, market movers, and real-time coverage right from the floor. Subscribe now at SchwabNetwork.com.
Good afternoon, we're now from the closing bells. This is Market on Close, and that's Coffee filling in for Marley Caden, coming to you live from our Chicago headquarters.
Hello there, I'm Sam Butters, coming to you live from the floor of the New York Stock Exchange. Let's take a look at what is coming up on today's show. We'll dive into the state of the bond market and discuss constructing your fixed income portfolio. Later, we'll be joined by the President and CEO of J&J Snack Foods to discuss the company's latest earnings and what lies ahead for that company in 2026. And we do have earnings after the close. We'll get you across the quarterly results from Zoom Communications. We'll break down the numbers and react live as soon as we get those numbers shortly after the bell. For now, though, Alex, take us through today's market action.
Yeah, well, action there was, no doubt, Sam, as we take a look at the S&P 500, just off its highs here, slipping a little bit, but still up about 1.5% on today's session. That doesn't tell the full story, though. The NASDAQ striking back after a struggle the last couple of weeks, 2.5%, a massive 600-point lead for the NDX. It is way out in front. The Russell largely keeping pace with the S&P 500 is up just shy of 40 points. That's 1.6%. The Dow Jones 200 points to the upside. Is certainly the weakest of the four, but still a healthy 44 basis point jump. Taking a look at some of the other asset classes and futures products that we have on our watch list. So we take a look over at the U.S. dollar. Really quiet last couple of sessions for the U.S. dollar, but it is comfortably above 100, and that is a notable change from where we had spent much of the last 6 months in the U.S. dollar index. Gold surging as well, up about 40 bucks, 41.20, just under that, where we sit about a 1% hop here today for gold. Crude oil remains firmly at below 60, but is working its way back to that mark, 58.83 in the January active month futures for crude oil and Bitcoin. Bitcoin was the story beneath the story, I would say, the last couple weeks. It has made a tremendous fall, but it does not go down without a fight itself. It's up 4.5% to 88,500-ish in the November active month Bitcoin futures. Sam?
Yeah, risk on and equity is in a bit of a recovery there for Bitcoin as well, as you mentioned. And just to zoom in on Alphabet, I mean, really reviving the wobbly AI trade. It seems today leading the market higher with about 5% rally. And this came after, of course, it's been getting a lot of praise lately after unveiling the upgraded Gemini 3 AI model. Alphabet was the best performing member of the Mac 7 last week. So certainly an extension of some of the gains that we're seeing today. And this comes as concerns around AI valuations and circular financing has been very much weighing on a lot of these tech stocks. But we have seen a nice recovery sort of broadly today. I mean, you look at AMD, you look at Intel, higher as well. Broadcom rallying after an upgrade there and a price target boost from HSBC, finding strong growth potential in the chip business. Memory names are also surging in the session today. Seagate and Western Digital among the best performers on the S&P 500. Micron's also been up there too after a price target hike from Morgan Stanley. The firm making the case now that while memory stocks have sold off lately on concerns around capex and easing shortages there, the pullback doesn't seem warranted as tight supply points to very strong earnings ahead. And really adding to the AI optimism, look at Chinese stocks today. They have been on an absolute tear in the session. Baidu popping up. JP Morgan upgraded the stock to overweight from neutral with a price target of $188 up from $110. The analysts there say the company's narrative is shifting on the cloud and AI theme. They estimate that Baidu's cloud revenue can grow to 61% in 2026 from 23% this year, and that the market is underestimating the company's transformation. And shares in Alibaba also ripping today after the company said its new AI app was downloaded more than 10 million times in the first week. The strong debut bodes well for the Chinese efforts now to really rival US chatbots like ChatGPT, which is not available over in mainland China. Alibaba, of course, remembering, will report its earnings tomorrow. I'll send things back to Alex, who's with Jenny Horn in Chicago with some of today's top movers.
Thank you, Sam and Jenny. Good to see you again, fresh off of NextGen like an hour ago. Well, let's talk some of the same stories that we spent quite a bit of time speaking about on our program, beginning with Tesla. I mean, this is like the quintessential next generation stock, and it's really performing nicely today. It's up about 7%.
Yeah, and really highlighting, I think, a lot of the commentary from, of course, CEO Elon Musk, because I'm giving some pretty major developments as far as FSD and the technology updates that could give them, in his opinion, a pretty major technology boost and a push into the broader economy world. So Saturday, he did take this social media platform X to respond to a post that was from an influencer who shared basically his detailed experiences with FSD as part of the latest V14 update, calling it smooth, praising its refinement over the prior versions. So Musk did go on to say that this is really the last big puzzle piece as far as the autonomy chip is concerned, and these comments could perhaps tease some of the unsupervised FSD arrival, which has been right now alluded to on the Tesla earnings calls. We know there hasn't been a specific date as far as when we could see robotaxis in Austin go driverless, but some are saying by the end of even this year. This is still fairly speculative, but what we know is that Musk is definitely trying to amp up enthusiasm tied to their chips. He did give another key update as far as the AI 5, saying that they're now being designed. AI 6 could be coming in just, the coming months. But designing chips can be valuable. We know that has turned NVIDIA into a $4.5 trillion company. D.A. Davidson is one that highlighted that chips that can work on various workflows are worth now an estimated hundreds of billions of dollars. But Tesla's chips that are used in vehicles and data centers to train the cars themselves, what they actually mean and what they're worth to Tesla's business is, I think, not necessarily as easily quantifiable, but ultimately Musk has planned to monetize their chip expertise via full self-driving and humanoid robots. That's going to be down the road, but it does help us. It does seem like it's going to be on an annual basis that we see the new iteration of each version of these chips comes out.
For those who have watched our programming through the day know that it sometimes keeps it interesting for us to say it a little bit differently each time, so I appreciate that. But when you look at the exact post, the part that stuck out to me the most, Jenny, was when he said, we're going to produce more than everybody else. That to me was like, one, a very big claim, but also like, okay, you can see the upside here where it's like the scalability if they can actually achieve that.
Yeah, and we've discussed in several ways, does this then create a threat to other companies that are producing their own in-house chips? No, I don't really think that we're there yet. Way too early to say that. I think that, though, it does reiterate the commitment that Tesla has really made to being a true autonomy play. But again, what that actually means for dollars and cents is what the next major component of Tesla is, because we tend to forget when we talk about valuation, we talk about the share price, we talk about Elon Musk. This is right now truly the only products they have that are monetizable are their vehicles. So they're going to have to also put up some pretty blockbuster fourth quarter numbers to then meet, of course, the year-end goal, which when right now we're just hoping for, I believe it's like around 1.8 to 1.9 million vehicles that would then put it on par with its last 2 years. So we don't have contraction for growth, because that's still going to be a very important aspect to the share price right now.
Yeah, it's the third biggest contributor to the rally today for the S&P 500, as it's contributing just over 9 points. So we round that up to 10. We round down the market's move today to 100 points. The upside, it's about 10% of the rally. It's just under that, of course. My rounding a little bit liberal, but nonetheless, 10% of the rally is still pretty impressive, especially given the fact that Tesla's a big company in terms of market cap, but it's not Alphabet, it's not NVIDIA in terms of its size. Speaking of a company that doesn't have that kind of size, but operates in the car business, at least the reselling of cars, that's Carvana. Nice upgrade from Wedbush as they upgrade this new used car king to outperform.
I know, so saying that the recent share pullback is overdone and investors actually should be taking advantage of the relative weakness in Carvana. That's what Wedbush Securities said in a note earlier today. So shares of the company pulled back about 13% over the last month, at least through Friday's close, then prompting the right now underwhelming near-term performance of not only just Carvana, but also its closely linked rival being CarMax, as well as there's been concerns over the rising credit markets, as well as just the affordability of the entire auto space right now. But Wedbush actually says that with Carvana shares trading at roughly 22 times their 2027 earnings per share estimate, they believe the company has now some room to run, saying that they delivered robust growth for several quarters. There are likely to be estimates in the near term, and this is backed by expectations that they will actually reach a leading market position by unit volume in fourth quarter, among other factor. So raising the rating to outperform from neutral is also then raising their price target to 400 from 380. But as we discussed looking at Carvana, there's a lot of outsized expectations. I mean, this actually only puts it at the more moderate end of some of the really big bullish price tags from the sell side.
Yeah, they've been able to scale up, but do so with industry-leading margins. So if it can continue down that path, you can see why analysts are excited about this company. From a trading standpoint, it is still quite volatile. We spent some time talking about that on Next Gen. But when you look at its implied volatility at 71%, it suggests to me at least that the market's not sold that it's going to be able to do that, but it reflects the potential if it is, and that's why this stock moves around the way it does. But at almost a 7% move, even by Carvana standards, this $21 rally is a big one.
It is, and I mean that's the thing about Carvana is we a lot of times almost address this as a meme stock. It's not really anymore, considering short interest has come down.
It was like a phoenix that came out of the ash.
It truly phoenix is a better way to put it, because this is a company that carried such high levels of debt, and it had such concerning financials when they were even the first to
Well, they couldn't even price the debt. I mean, there was a time when this company was in serious, and I don't say that, it just was the case. Like,
no, I mean,
the debt was, it was a scary time.
They explicitly stated we do not know if we have the cash from our going operations to continue. I mean, that was a real
we can't price the debt, so I don't know how we're going to get more, but hey, it turned around, and it turned around not only in a hurry, but with like force, and it is a successful firm now. So tip the cap, because not very many companies are able to rise from the ashes in the way that they did. So never quite, got all the way to that bankruptcy, but they were teetering on the edge there. Let's talk Alibaba. Sam mentioned this story. We talked about this on Next Gen as well. Closeout market. You can't go in there, at least as it is right now, with OpenAI and some of these different, ChatGPT, etc. That means there's a giant market that is just starving for some sort of AI product. Companies like Alibaba trying to step in and fill that void.
Yeah, so Alibaba's now new AI assistant, otherwise known as Gwen, surpassed 10 million downloads in its first week of public beta, outpacing even the early adoption of ChatGPT and DeepSeek. But this strong launch does support their push to help really build a leading AI platform that is expected to hopefully compete with global models like Google's Gemini as well as ChatGPT, which are currently unavailable in mainland China. But Gwen did mark Alibaba's most significant step yet into the consumer AI market, which does aim to transform its cutting-edge foundational AI model capabilities into real-life applications and tools. But it comes, of course, as we see this overall shift in Alibaba's business model. They've been trying to undergo this turnaround for years at this point, really like in a post-pandemic world, where we're finally starting to see some areas of their business consolidated, and also, I mean, this really powerful narration shift that we've seen that has sidelined investors for quite some time. So will we see this as a real credible contender in the AI arms race? I think it's a bit of a different company because it, of course, does primarily serve China, not here in the U.S., where we naturally are watching how companies trade and evolve. But it does definitely signal a broader push from Alibaba. And we have earnings from them overnight or just tomorrow morning, very early. We'll have financials to hopefully back some of that hopefully evolving narrative around Alibaba.
Yeah, it's almost like we have two different races happening at the same time, and then one ultimate race. So it's almost kind of like you think like the NFL. You got the NFC, you got the AFC, and then eventually they meet for the Super Bowl. They might be the winner in China, and that's a huge opportunity. This company's starting to look more like Amazon every single day. It's not e-commerce only anymore. The cloud business is surged. And now perhaps a up-and-coming AI winner, at least in mainland China. Last one though, Alphabet. My big question is this now the AI standard bearer? At the moment, it feels like it is.
I definitely have 66.5% now on the year, up another 6.25% today, and I mean our best performing Mag 7 name of at least the month so far is up over 13%. And also with some positive developments, as we know, Google Cloud did say it has signed now a multi-million-dollar contract with the NATO Communications and Information Agency to help deliver these secure sovereign cloud capabilities. The company did say that the Google Distributed Cloud was selected to support the Joint Analysis Training and Education Center, which will use cloud infrastructure to help modernize its operational capabilities. But Google's distributed cloud air gap does bring Google's cloud services and AI capabilities into this completely disconnected, highly secure environment, which then allows various organizations to meet the strict, but of course, very important sovereign requirements, and that's per Google Cloud. So basically, they make it very highly customizable to take apart parts of their cloud to then access, say, using a government, website or government type security. That's basically some of the parts how they're trying to say that they can basically have their cloud right now adapt to your business needs, which right now in the world of enterprise spending, it is huge. You need to be able to have a cloud solution that is adaptable, but also trainable to these, like high compute models, all also being highly secure at the same time.
Yeah, I don't even know how you could how secure it possibly could be, but it is
Better
secure.
Be secure.
It is secure. If we think about, all the financial companies, from JP Morgan to Charles Schwab, whatever, it's so important to have cybersecurity stuff. But now we're talking about government secrets and things. I don't even want to go there, but
I know.
I will trust that Alphabet and Google, alongside all their other partners in these projects, got things in a good place. Jenny Horn, always a pleasure. As we send it back to New York and Sam Bottas.
Thanks so much for that, Alex and Jenny. Well, coming up, we will switch gears and turn our attention to the bond market and how you should be setting up your fixed income portfolio. That's coming up next on Market on Close.
Hey, investors, you know the market moves. Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm Nicole Pedalides, live at the New York Stock Exchange, and this is the Watch List. Your midday view into the trends driving the markets with a sharp focus on technology, innovation, and companies leading the next wave of growth. Big movers, real-time interviews, and insight from analysts, founders, and market voices you trust. The Watch List, 2 p.m. Eastern, only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Real-time access, data-driven analysis from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live. Subscribe free at schwabnetwork.com.
Welcome back to Market on Close. I'm Sam Bottas alongside Alex Coffey. Let's switch gears and look at the fixed income market. Welcome in our next guest, Warren Pearson, co-CIO and portfolio manager, Baird Funds. Thank you.
Step into the world of Nespresso and bring magic to every morning. Shop the holiday gift collection at Nespresso.com.
With Pubg, you can buy and sell crypto fast. How fast? Let's find out. Can buy
Stock. Represent ownership in a company. Each unit of a stock is called a share. If you own 50% of YouTube
For you
stock,
guys.
you own half of YouTube. Shareholder. Someone who owns a stock. Stock exchange. Place where investors can buy or sell stocks. Public company.
I'll put it down if you guys don't know. In the comment section somewhere. Just let me know.
Stock. Represent.
going with.
True Religion has got the goodies this year, just like global R&B singer Ciara. She's slaying the holidays with new sexy sweat sets, stitches that speaks volumes, and layers that will level up any fit. Now it's your turn to get wrapped in true with presents that pack it all in, because the holidays aren't just about what's under the tree. They're about how you show up. Get it just like Ciara. Gift the best at TrueReligion.com.
much. I'll be back.